All right, Chris, I think we could probably get going.
Sure.
So-
Ready to kick it off. Thanks for joining, everybody. I do see some familiar names out there. Some of our current customers, some people that I've had recent conversations with. So wherever you are joining us from across the globe, good morning or good evening. And look, we're going to have, this is an informative, fun discussion that Danny and I are going to kind of walk you through. And we'll call it the who, what, why, and maybe a little bit of because I think some of the things about this asset class, maybe people don't realize actually existed before. So without that, we're going to dive right into this slightly overlooked asset class and the benefits to investing in it and why we actually exist as a broker.
Yeah. All right, let's get cracking. So I always like to start with a bit of light humor. So there's an Irish proverb that goes, "What whiskey will not cure, there is no cure for." Now this goes, obviously it's light, it's fun, but it also goes some way to sort of portray the cultural significance of this drink and of this asset at large. So it's kind of a theme that we're going to be portraying throughout this discussion is not only that obviously this is something that has inherent value in the sense that it's it's an asset that gets consumed, but also there's something else to it, and there's something very culturally significant about this beverage. So we're going to take you through that now.
Yeah, no, definitely will not cure, there is no cure for is definitely a play on words for sure. Sometimes you might need a cure if you drink too much of it.
Yeah,
but, so like that's a little bit about what we're gonna do. But I guess most of you don't know who I am. So my name's Chris Brankin. As the invite would have told you, I've been in the standard financial services world for more than 25 years, which kind of consisted of different banks and broker dealers, and it was more on the stocks, options, futures type of trading. And as I started my financial career back in the mid 90s in Chicago, I traded corn options at the Chicago Board of Trade. So as I laugh and kind of look at it, I've kind of come full circle where I traded underlying grain in terms of my first job out of university to now, as I've lived in Singapore for the last 15 years, is selling investments into owning casks of whiskey. So definitely a full circle in terms of how we got here. And then also with us today, is Danny Pedroni, our marketing director. I'll let Danny kind of introduce himself, but fantastic and really whiskey aficionado, that joined us, a little about 6 months ago.
Yeah, thanks, Chris. So yeah, as Chris mentioned, just briefly, I'm the marketing director. I sort of assist everybody in the operations side, and I am also a big fan of whiskey myself. And I've put a little party trick there where Chris and I have been known to consume a bit of whiskey ourselves. And I think maybe if you end up purchasing a cask, anybody out there, then you can come into the office and maybe taste a little bit for yourself. So we're going to be taking you through a little bit of a tour on how whiskey casks appreciate and why we think they're such a great investment.
Yeah, no, absolutely. And right in back of me is our tasting room at our office here on Telek in Singapore. So always welcome, if you're part of the Whisky Cask Club, to kind of pop on in. Or we look to have events and tastings here all the time. So it's something right in the center of town. It's really relaxing, in terms of setup, and we have lots of whiskey here in the office for you to test out.
Yeah. Thanks for that, Chris. So I want to start by giving you guys a bit of an overview, as this is quite a unique asset class. It does take a little bit of explanation as to how the whole thing works. So first of all, what is Scottish whiskey? So Scottish whiskey is what we deal with nearly exclusively here at the Whisky Cask Club. And how we define Scottish whiskey is quite important, because that goes some way to describe why it has value and what sort of creates that value. So Scottish whiskey is a malt grain whiskey that has to be exclusively made and matured for at least 3 years in bond in Scotland. And that distinction is very important, obviously, because there's a lot of whiskey that is produced globally. But what sets sort of Scottish whiskey apart is that it has to be exclusively created and stored and matured and also bottled, if it wants to be bottled as Scotch, in Scotland. So why do we age whiskey? This is essentially the crux of the matter. How does whiskey add value to itself? So the thing with whiskey is when it ages in a cask, it improves sort of the flavor and the complexity of that whiskey as it's allowed to absorb the characteristics of the wood. And for those of you who know a thing or two about whiskey, you know that this wood plays an important role in creating the beverage that is consumed and loved by so many people around the world. And obviously, the length of this aging will significantly impact sort of the taste and the uniqueness of that whiskey at large. Another important distinction is that whiskey will stop aging when it's taken out of a cask and when it's put into a bottle, and that's something that's quite important in this overall sort of dynamic. And we're going to touch on that a little bit later, and why whiskey, when it's aged to a certain level and as it ages, becomes more and more valuable. Briefly on as well on whiskey cask investments. So this is a way that we can sort of take advantage of this process of aging and appreciation, and to basically allow you guys to profit off of it, because this is a value creating process, and through a whiskey cask investment you can profit off of this process basically. So yeah, it's something that we're going to cover in more detail throughout this presentation.
Yeah, thanks, Danny. So I think he makes a great distinction there as well. So once you take whiskey out of a cask, it no longer matures. It's basically a 10-year-old bottle of whiskey is always a 10-year-old bottle of whiskey. And that distinction between whiskey and wine, there are some people out here, I'm sure, on this chat that also invest into owning wine as an investment. Is wine will continue to age in a bottle. It'll take on different flavors and complexities, as where whiskey, once it's put into a bottle, whether that's 10 years ago, that's not, you don't own a 20-year-old a bottle of whiskey. You own a 10-year-old whiskey that's been in the bottle for 10 years. So that kind of takes us in, the cost of time. So that is essentially why we exist as wholesale brokers. So the Whisky Cask Club, and other brokers like us play a critical role in the financial ecosystem of the whiskey industry. This is, not to understate this at all, because essentially without brokers like us that provide some type of inventory financing, we'll call it cash flow assistance. It is difficult, for many of these distilleries and suppliers to cover their costs, because once you put the time and effort, there's a lot of cost that goes into making whiskey. And if you can't get any of that money back for at least a 3-year period, so that's 3-year minimum where it's considered whiskey, and more likely where it's going to be closer to 7 years, 8 years, 12 years, 15 years, is where they can't touch any of that whiskey that's in these barrels, and therefore not make any profits. And everyone has bills to pay. Now, some of these distilleries are owned by giant conglomerates, and you would see less and less new makes. So new make is something that is 3 years or less in the barrel, because they don't need to sell as much of it in order to generate cash flow. So we'll mark this up as the Diageros and the Pinot Ricards of the world, but that only includes about 1/3 of the distilleries across Scotland. You have the other 2/3 of the distilleries that need some type of inventory financing and some cash flow, and that's where we come in as a broker. So simply put, as wholesale brokers, we buy in bulk through our fund, through our unit trust, in order for us to get the lowest possible prices, because we're buying in bulk, and then that way we're able to pass on that savings to you as the investor, to be able to purchase and own these investments at the lowest possible entry points. I mean, it's a really, from a high level standpoint, we're a relatively simple business. We are we're a broker that is looking for access to whiskey that other brokers don't have access to. We leverage our buying power to get the best possible prices, and therefore give you access to some of the best whiskeys in the world at the best possible prices. So it's a rather simple process that doesn't have to be overly complicated.
Yeah, thanks, Chris. So basically, what we want to try and get you guys to come away with is the fundamental concept behind a whiskey investment is this idea that in a cask there is appreciation. So if you remember what I said a couple slides ago, here we have 3 examples of 3 identical liquids that have gone into these 3 would have gone into the cask as identical. One is 12 years old, one is 15 years old, and one is 18 years old. So I want you guys to have a little think about if I reveal to you what a bottle of 12-year-old Macallan. Now this is from Singapore duty free, so that's my source basically. So I'll let you guys think. So if we have a $152 12-year-old Macallan, these are all double cask matured, so they've been in 2 casks, just to give a fair comparison. Have a think about what you think of 15-year-old. So we're looking 3 years of difference. How much do you think the appreciation is for a 15-year-old Macallan? So we're looking at about 292.99. So I guess near enough to double in a 3-year span. And what about the 18? You see, the 18 is quite a unique color, which is quite fun. So you can see that the cask has really made an imprint on the liquid itself. So after another 3-year period, it gets up to $666. So this gives you just an indication on how much value the cask and the maturation process is actually having on the value of the whiskey and the final product itself. So that's just a fun visualization for you guys, just to understand how this is working and actually visualize, okay, we're getting some very decent returns on this appreciation.
Yeah, absolutely. I mean, you can see that exponentially as whiskey gets rarer, as it gets older, it goes up significantly in price. So you'll see 2 major points that I think we focus on here at the Whisky Cask Club in terms of an investment standpoint is either things that are new make, so things that are relatively young or freshly put into the barrel. Is there's that nice appreciation point from years 0 to kind of years 5 or 6. Because at years 5 or 6, they're very marketable to go into blends and bottles at that point. Or, I think some of the things that we look to focus on is, okay, can we find things that are anywhere from 5 to 8 years old now, reputable names that we know, okay, in a 5+ year period, that we're going to start having these 12+ year old whiskeys that we know from a market standpoint are very marketable and become increasingly more valuable as they pass that 12-year mark.
Thanks, Chris.
Yeah, so this is one of my favorite slides, liquid gold, but why? So I guess as we understand the market and as the group of us here at the Whisky Cask Club, we want to be your guide. So that's what we are trying to leverage our expertise, where the Whisky Cask Club has over 50 years of relationships across Scotland, 50 years of industry experience. So we are here to kind of help you walk you through the who's, what's, whys, and hows. And that is, okay, where do we see the value? So just as I mentioned, okay, whether it's on new make or whether it's on things that are slightly more aged at this point, and also look at reputable distilleries that have well-known names or are part of a blend that has great marketability when you're looking to sell back your investment sometime in the future. And then a big part of that is, okay, so when we are dealing with reputable branded whiskey, we also then, okay, we want to make sure that this is stored and insured so our investment is safe. I mean, it's the number one thing that we're asked. Okay, so once I invest X amount of dollars, how do I know my whiskey is in fact safe? And if something does happen to it, am I covered? Yes. And in fact, with any purchase through the Whisky Cask Club, we cover your first 5 years of storage insurance as where we pay for it. Now, after that, you can add on blocks of insurance. In the future, we can talk more about that if people want specific detail. And then going along with that, okay, we have reputable whiskeys, we have storage and insurance, is we want to make sure that we can authenticate the whiskey that we receive as coming from these reputable, whether bonded warehouses, suppliers, or distilleries themselves. So that's kind of, I think some of the most important parts. But the one item that, is asked less about is you need to have a little bit longer time horizon in terms of what you're looking from an investment. Yes, you can buy whiskey casks and a year later try and sell them, but that's generally not where you're going to make your profit. So I think if you are getting into this, you need to have a little bit longer time horizon in terms of what you're expecting in terms of your return. So I would tell most people look at least kind of 5 years, because at that point, whether you're buying a new make or you're buying something that's already matured for 5+ years, those are two very good exitable points for you to market your whiskey. And then on top of that, just like any other investment, I think liquid gold, is nice to have some diversification along with it. And when I talk about diversification, I'm not talking about from your stocks and bonds. I'm talking about within the whiskey itself. So you have different, regions. You have different woods that you can age it in. You have different kind of, started off in one type of barrel, you finish it in another. So because as tastes and change over the years, it's nice to have, okay, I have a mixture of Highland whiskey and Speyside and Islay, all these different things. Maybe they're aged in some slightly different woods. So that way you would have a well-rounded whiskey portfolio that we can help you as Whisky Cask at the Whisky Cask Club in terms of how to best diversify across different regions and different types of wood.
Yeah, that's a good point, Chris. And as well, I think another important point to touch on when we're talking about appreciation is that by the nature of the aging process, we're losing a degree of whiskey every year.
Yes,
so
the angel share.
Angel share is quite an important point to make, because if you're losing 2% of your liquid every year, then an 18-year-old whiskey is going to be much scarcer and much rarer than a 12-year-old is. So then you're going to get a degree of, okay, there's not much of this liquid, therefore making it a little bit more valuable. So the nature of the aging process is quite an important thing to get your head around when you think about, okay, how could this possibly have this sort of increase in value across the board?
Sure.
And just as well, I think Chris already kind of touched on these points very well. What else what are the other influencing factors? How do you diversify yourself in this investment? And I think, as Chris already touched on, you have the wood type and the cask size. These are very significant. The smaller the cask is, the more influence there is from the cask onto the liquid, and the stronger the flavor. That's making an impact. If it's being aged in a bourbon cask, or if it's been aged in an ex-sherry cask, you're going to get a little bit more sweeter, a little bit more flavor. So there are quite a few ways that you can diversify this investment, and quite a number of factors that play into the final product, which is cool. And as well, we touched upon already, the age is also a very, very key component. Now, obviously, we said, the older the whiskey gets, the more valuable it becomes, but you also need to think about your timing, because if it drops below 40% total alcohol level, then it can no longer be called whiskey. So there are definitely ways that you can, things you need to think about as to what's going to influence the final value of your investment and your exit strategy as well.
Yeah, absolutely. I kind of stole a little bit of your thunder there, Danny. I got ahead of myself a little bit. Yeah, so we kind of did throw in the next little slide here. It's just an interesting tidbit. Is, what was it, 43 bottles a second are shipped out of Scotland, every second. So that's from the Scottish Whisky Association. And just to kind of give you a higher level, that's 3.7 million bottles every day get shipped out of Scotland on a daily basis. So some people have asked me in the past, like, how's demand? Well, demand is very strong. So just for them to be able to keep up with that, these production lines at these bonded warehouses, they're 24 hours a day. In terms of the sheer volume of whiskey that is being produced and sent around the world, is a staggering amount.
Yeah, and I think it's as well. As society, the middle class is increasing, and people more increasingly are wanting to get their hands on luxury products and luxury goods. So what we're seeing, interestingly, from the Scottish Whisky Association is a big increase in what we call historically developing countries. But nowadays, countries like India they're producing their own single malt firstly, but they're also they're keeping the demand constantly increasing for the Scottish product, because if you think about in a cultural sense, the Scottish whiskey is always going to be the granddaddy. It's the Porsche, it's the Ferrari, it's the Lamborghini of the whiskey world, and these brand images are very, very powerful. So what we're seeing is in the developing world, in Taiwan and across Asia, we're seeing a lot more of a demand for this quality good. So now that we've sort of taken you,
I missed picture day here.
Yeah, he missed it. Unfortunately, Chris was absent. Maybe, yeah, I don't know where you were, Chris, but just to give you, so we've given you a bit of a background on the actual product and how it invests. So who are we? So we originated back in 2021 as a bit of a post-COVID enterprise. That man in the middle, Alex, is our CEO. So he started this business 3 years ago, and we've been sort of growing ever since. We're officially based in Singapore, but we have 11 full-time dedicated team situated around the world. So just to give you an idea, I'm based in Thailand. We have staff in Australia, Singapore, India, and Hong Kong. So we're fairly spread out, and that sort of allows us to have a bit of flexibility depending on who our customers are. So we have very real feet on the ground in a number of markets, which gives us, I think, a bit of an advantage. As well, what else we provide is a range of financial and industry expertise. So as Chris touched on previously, he has a very experience in sort of the financial world. And we also have 20 years of experience in the whiskey market as well through our CEO. So it gives us the ability to not only have the expertise, but also offer a sort of a wider range of investments. What we've been touching on has been largely to do with the single cask investments, but there's also a range of options available to you and to investors, and these are as follows. Bang.
There we go.
Yeah. So Chris, do you want to maybe take us through the different options that are available?
Look, this, so this is, it ties into some of the things we've already, kind of mentioned already. It's just the overall investment potential as whiskey appreciates over time. So essentially there is a finite amount of supply. We have demand is continuing to go up. And if we look at, Knight Frank's luxury, index, that comes out annually, they are anticipating that demand for Scotch whiskey goes up 6% per annum, at least up until 2030. Now we talk about diversification, and this is a diversification in just your overall investment portfolio. Like, this is a hard physical asset that, is a good, it's not correlated to stock markets, to economic fluctuations. So it's a good hedge against inflation. Now, I'm not telling people, hey, take your whole investment portfolio and buy Scotch whiskey. But what you should be doing is, okay, what can I look at in terms of, can I take 5 or 10% of my investment portfolio and look to buy some type of alternative asset that falls into some type of hard asset class? And I think if you look at it from Whisky Cask ownership potential, especially over the last 10 to 15 years, the returns on it have been double digit. You see 12 to 18% returns is what we're seeing at the Whisky Cask Club. You have people out there, I like to refer to them as the bad actors, that say, hey, look, you're getting 25, you're getting 30, you're getting 33%. That's it, I think, is the case of if it sounds too good to be true, it probably is. But as I explain to people all the time, like we shoot for kind of that 12 to 14% in realistic terms. That means you're doubling your investment every 5 or 6 years. Kind of the third thing I think is we look at it and a number of investors that we have, some of it is to do with personal enjoyment. Like, hey, it's kind of cool. It's unique to have cask ownership. Now, whether or not you're just buying and hold it for investment, or you're buying it maybe even with a couple other people in order to look to bottle it at some point in the future. And then kind of one of the more recent trends that we've seen is people are maybe a little bit of a legacy investment. So we have people looking, to purchase a cask of whiskey for their son or daughter's year of birth and then give it to them on their 18th birthday. Well, great, man, that would be a lot better present than I probably got for my 18th birthday. But yeah, I mean, so there are some things, and then we've had a few people recently look to buy it as a birthday gift. Like, hey, your husband or wife has everything. Well, but why not, look at investing into a cask of whiskey that you can own. It's your physical asset. I tell people you can visit these, casks. You can get a small bottle drawn out of them when you visit for a nominal price. But it is something that is a tangible hard asset, and it is yours to do with whatever you want. And then as we look at just overall market trends, is continuing rise in popularity. Danny mentioned it, the creme de la creme of the whiskey world has always been Scotland, in terms of what has been produced over the last, few hundred years. And this is not slowing down. You have Diageo is investing over 150 million pounds to reopen a mothballed distillery in Islay. So that, there is a commitment to continue to grow the Scotch whiskey market from some of the big brands. And also, it's just a growing part of, people's lives across the globe.
Yeah. That's all great points. As well, I think touching on that as well, the opportunities are becoming increasingly more open for whiskey cask investment. For those of you in Singapore, you'll know that we have what a mass regulated fund is, and that's something that we also offer at the Whisky Cask Club. And for our Australian friends, you can also your SMSF is also, you can also purchase casks unit trust via that. And if you have additional questions on the specifics of these, then we can get you in touch with our specialists around the world.
Yeah, and one point that I forgot to raise, Danny, you reminded me of that it's also very tax advantageous to most investors around the globe. Me being a U.S. citizen, I don't always get all the tax advantages everyone else does. But because it is considered a wasting asset in the UK, that if you buy an asset in bond and you sell it in bond, so you buy a cask now, you sell it 5-7 years later, it's a non-taxable event. So just you spend 20,000 pounds investing on something today, 6 years from now, you sell it for 40,000 pounds. That is a tax-free event for most people around the globe. Like, I'm not a tax specialist. If you do have any questions about that, I would talk to your tax advisor. But it is something that we know, at least from the UK, Singapore perspective, that it is a non-taxable event if you buy it and sell it in bond. And bottling it gets a little bit different, but definitely something that is unique to this type of investment.
Yeah, thank you, Chris. So of course, it would be nice if it was all, sunshine and rainbows, the perfect investment. But it's important that we tell you that there are, of course, some risks that are involved with any investment. So the first point is what happens if Whisky Cask Club is no longer active. So the great part about this ownership is it doesn't matter if we're not active or not, because the cask is in your name in a Scottish bonded facility. So we don't hold any of the stock anyway, and it's all stored in a Scottish bonded warehouse in your name, and it belongs completely to you, and you can do with it what you please.
Correct. I think that's a big point to raise. Some people are like, oh, if you're no longer there, what if you get hit by a bus? So I always like to say, what if we win the lottery and we no longer have a business? You own the whiskey, you own the liquid in the cask. Like that is yours to do with whatever you want. And that's really important distinction, because some brokers out there own it on your behalf, which is all well and good. But, if, they, are no longer in business for whatever reason, sometimes, it becomes more and more difficult for you than to have to present, that your legal ownership of the actual whiskey itself.
Yep. And what happens if global demand implodes? So as sort of Chris touched upon before, what we're seeing is sort of an unprecedented boom in whiskey casks, specifically Scottish whiskey, globally. So it would obviously take some serious event for people to stop drinking whiskey. Can't think of any off the top of my head, but I think
COVID did not stop people.
COVID didn't stop people. When you're happy, you drink whiskey, and when you're depressed, you drink whiskey. So I think that's a pretty cool aspect of it. But in all seriousness, the trends that we're seeing are all very, very positive, and even growing in as I said before, the sort of the classical developing world, which is soon is now becoming the more advanced world. So we're definitely seeing a significant rise and rise in the demand for high quality Scottish whiskey. And our whiskey cask insured. So as Chris said, we fully insure the casks for a period of the first 5 years. After that, you can buy insurance blocks on top of that, but it's completely covered for damage or for fires or for anything really. But I mean, they're sitting in a bonded warehouse in Scotland. They're not being transferred from place to place, so they're quite secure in how they're stored anyway.
I always like to tell people, I go, these are not what you've seen on movies in the past. These are state-of-the-art warehouses that hold 5, 6, 7, 10,000 casks of whiskey. I mean, they're the size of football pitches, so they're, these are not old barns, so to speak, that are holding your casks of whiskey as they appreciate in value. For the last thing, I think that people ask less so is about FX. So well, what happens, if the pound goes up or down? Well, or maybe they don't even know that much about it, but they're like, well, is there a potential risk there? Well, look, I think I can have a separate discussion on this, all by itself. But just from a relative sense, this is a great time to get involved in the whiskey cask ownership business. Because from a relative value, you look at many bank analysis out there, they're saying that the pound is up to 15% undervalued the US dollar at this point. So all investments are held in sterling, so they're held in British pounds. So if over the next 5 to 6, 10-year period that the pound strengthens anywhere from where it is now, that's nothing but positive for your investment. Sure, the flip side, it does exist as well. But in terms of where the pound is from a macro perspective, where it has been, recently, in the near term, it looks like there'll be a pound, weakness probably for at least, foreseeable short period. But as we look a little bit further out, as your investment continues to age, it would be, from a relative perspective, you would think that the pound would be stronger than where it is today. That's just my opinion.
Yeah, that makes sense. So yeah, those are essentially the risks that we foresee. So now I'm going to give you guys the opportunity to type in some questions to us. If you'd rather speak to us personally, that's also cool. But if you also have any pressing questions now, we'll just give you a minute or so to maybe ask away. And as you guys are doing that, you can also contact us directly through this QR code here, or by contacting us by our email address. But any closing remarks, sort of, from you, Chris, in terms of any additional things about the investment you want to share?
Look, I think in terms of, probably one thing that we didn't really touch on is the exit process. Okay, you told us how we can buy something, like whether it is 3, 5, 7, 10 years down the road, how am I going to exit my position in terms of what I have purchased? So we have 5 different strategies in terms of how we look to liquidate your position. And a lot of that starts with, okay, that we're getting you into a whiskey that we feel has value going forward. We provide you distillery notes. We look at maybe the new make stuff that I've mentioned, or we look at things that are maybe in the barrel for 5 or 6 years already at this point. Some of our whiskey consultants might have slightly different viewpoints on where the value curve is. But I think those are 2 areas that I focus on. And I do that mainly for, okay, where are we going to exit in the future? So we look, you can look at distilleries. It's a little more rare. They're generally not buying back some of the stock they've sold. The main exit points would be bottlers and blenders. Blenders probably being the number 1 exit strategy. You can also go to a private third party, and you can go to auction. So if you do hold something that gets increasingly rare, becomes increasingly more valuable, we can go to an auction, but auctions do also charge you a 20% fee normally in terms of what they sell your investment for. So we do have multiple strategies in terms we do that. And what we do, any investor that comes back to the Whisky Cask Club to liquidate their position, we will do that for you at no commission. And the reason why we do that is, okay, if we got you to invest $25,000 today, 5 or 6 years from now, it's worth $50,000. Well, look, that's just a great marketing point for us. Maybe you'll invest some money back, maybe you'll tell a friend, but we really focus on having these different strategies, and we look at it throughout the course that you own the whiskey. So I think that's really important. Is we're not just here to sell you an investment and see you later. We're here with you to kind of work on what it is, what your goals are in terms of your ownership throughout the course that you own it. And I think, another point on that is there ways that maybe I buy year 1, I buy year 2, I buy year 3, I buy year 4, and then I start, on the reverse side, I start liquidating some of those things as I get, past that year 5 and 6 year period that I own it. All different things that we have in terms of exit strategies is really important, because I don't think we really covered much of that in detail so far on the webinar.
No, that's a good point, Chris. Yeah, and I think it'll obviously vary depending on your time horizon and how long you're looking to hold, and that will also sort of change up your overall strategy as well. Got a good question here from Darshan, who I can tell is a bit of a seasoned investor. Because would you recommend investing partially in several whiskeys to minimize risk or increase potential? Now, I know we touched on diversification a little bit before, but maybe you want to touch on exactly that strategy in terms of investing in several whiskeys across the board.
For me, absolutely. I would, it's the, being in finance, my whole life, is you don't want to put all your eggs in one basket. So I would rather, if I had a budget of, whatever, money's relative, so let's say $30,000. Okay, rather than buying one cask for $30,000, I'd rather buy a multiple amount of casks that have different region, different wood. That way I have some automatic diversification built into it because I have multiple casks that, as flavor profiles and desires of people, palates change, maybe the one today that is a lesser value, in 5, 7, 10 years from now, that's the one that is more sought after. So I think rather than just taking one cask for my total budget that I want to spend, I'd rather split that up amongst multiple casks if I have the ability to do that. Or if I have a more limited budget, let's just say I only have $5,000 or $6,000 to start with. Well, I would look to buy a certain cask in year 1, and then maybe year 2, I look to then diversify. Okay, I bought something from Speyside in year 1. Now I'm going to buy something from the Highlands in year 2, and that's going to have a slightly different wood to it, or some different flavor profile. So you could build your diversity into it, depending on your budget size. But I think no matter what my budget is, for me personally, if you say I have X amount of dollars to spend, if I can, I would like to be able to break that up a little bit in the beginning. But if it's a smaller amount that I can start with, then I can always build that up over the years.
That's a good point, Chris.
I hope that answers. There's his response. Okay, welcome, Dr.
Any more questions from the audience? Okay. That's all good. So what we'll probably do now, guys, is if you have any pressing questions or any queries, please do feel free to contact us here. We're available all the time. We're across 5 or 6 different time zones. So we're available nearly 24/7 to help you answer any questions you guys have. Anything more from you, Chris?
No, feel free, contact us, scan this. We'll have one of our investment consultants, kind of reach out to you guys. Maybe even get lucky and it'll be me. But we'll look. Again, thanks for joining. I know. Look, it's a Tuesday evening. And not always ideal for everyone. We will have this recorded and put up online here in the near future. But again, thank you very much for spending the last kind of 45 minutes with us. Hope you learned a little something. And if you have any questions or any ideas that you would like to share, or thoughts that you would like to have answered, please let any of us know, and we'll be more than happy to help you.
All right, guys. Thank you so much for your time today, and we'll be in touch. And happy Tuesday. Have a lovely week, and we'll see you guys in a bit.
Cheers.
Cheers, everyone. See ya.